Hey folks, thanks for tuning in to TD Talks. Today, TD Talks market commentary. It's the end of the week. It's the end of a wild week. Lots of twists and turns, like watching Parent Trap. Lots of twists and turns, and it's beautiful at the end. You do a nice happy cry at the end because things are up, things are going well. Look, it's April 11th, 2025. Market just closed for the week, and the market roared back this week. We saw a really big pop earlier this week after the announcement of a change in trade policy, and a lot of the countries are coming to the table to talk tariffs and negotiate tariffs, except for one. Except for one. China's on Defiance Island. They're on the island of Defiance. It's not a U.S. territory. Apparently, they own it. They're on it. They're not coming to the table, and in fact, they're retaliating. So things could get ugly there. But I mean, looking at what we've seen so far this week, the Nasdaq 100 gained over 9%. The S&P grew, rising about 8%. Dow Jones was up just under 7, and then small caps in the Russell 2000 lagged behind the group, but they were still up about 4%. So for everybody on television, clutching their pearls, talking about this is the end, it's over, it's down, and it's never coming back. I don't know how they have any credibility at this point. They consistently go on television and say things that are consistently disproven, but yet I guess they're entertaining enough to sell the paranoia. Folks glued to the television. They can turn around and tell the advertisers, "Look how many people we kept glued with our paranoia. Look how many we kept glued. You should advertise more Ozempic and TurboTax on our show. You should do it. Look how many people we keep glued." Makes no sense. The winners of this week are like the people who are the winners of the past decade and the past couple decades. The people who stay in the market and get in the market. In my opinion, they're the winners in the long run. And the math, data, and economics proves that. It shows that. It shows the history. So we'll see how things turn out. I have noticed that China has been dumping U.S. treasuries, which is driving yields up, which won't be great for refinancing federal debt if yields are going up, and it could have an effect there. But we'll see. It's been very interesting. I've read a lot of stories about different companies either looking to manufacture in America or manufacture in different countries. I think I talked about on the last market commentary podcast that Luck Shares, the chairman or CEO of Luck Shares, was talking about shifting some of their manufacturing, or maybe all of it, from China into India. I think India was one of the first countries that came to the table, one of the first countries that came to the table when tariffs came out to say, we want to make a deal. We want to have a healthy relationship with the United States. And at the end of the day, it needed to happen. We needed to have some sort of, fair trade relationship with the rest of the world because we can't be financially, we can't be printing money that we don't have to fund, being the world's defender, being the world's big brother and coming to defend the world when things happen or when natural disasters happen, everything else. If at the same time the people that in the countries that we're working to defend and protect and care for in those situations, we want our cup to runneth over. We want it to runneth over. You can't be the shining city on the hill if the lights are flickering, okay? And our lights are flickering financially as a country. Things are out of whack. We needed something to balance trade because financially we can't support being this outsource of care and protection for the rest of the world if our companies aren't able to do business competitively internationally. And when they can do better and they can sell more, they pay more in tax and it generates more tax revenue. They can hire more people, which creates more payroll taxes, which benefits the whole. But when there's this barrier to entry in a lot of countries, which they don't experience when they want to sell something here, makes it very difficult for countries to grow and for us to be able to continue to provide the things that we want to as a country. We want to have influence abroad. We want to have influence to create a more free world. And you can't do that if you're choked in your ability to grow things economically. So we'll see how things play out. But as we've ended the week here on a positive note. I don't know if it's the bottom, and nobody does. Nobody knows. Nobody knows if it's the bottom. But it could have been. I don't know. We're kind of waiting it out to see. But again, we're always thinking in terms of the long game. We want to think in terms of the long game. When you think in terms of the long game, you can emotionally get through these short-term hiccups, these short-term volatility spikes that we see up or down. And when everything went up earlier this week, I wasn't, doing backflips and going, wow, this is, we've won and it's over. And this is, I mean, we gained back some of what we lost in the correction, but not all of it. It's not time to, dance in the end zone. but it is time to, maybe clap a little bit that we made a first down and moving the ball back down the field. If you don't get that reference, that's a football reference, American football reference, the real football, in my opinion. I know I have some people who don't agree, but that's okay. That's okay. Um, I think coming up in the next week or so, markets will improve if sentiment improves on the tariffs. If we start, apparently, from what I've seen most recently from the Wall Street Journal, is that there's about 15 countries of the 75 roughly that have come to the table. There's about 15 where there are active deals on the table to get, a reciprocal tariff or maybe no tariff agreement in place. I don't think we'll end up with no tariffs whatsoever. I don't think so, because a lot of countries depend on that tariff revenue in order to fund things as a sovereign nation. Uh, so I don't think we'll get to zero. But if we get positive news about, the EU, UK, Japan, India, all these other countries, and we get good news about good tariff deals, and we can calculate what that's going to generate in revenue for them, what's going to generate in revenue for us, and what it's going to do to really streamline the economic growth that we're expecting. I think that level of positive sentiment could really send us on a really good bull run. What could generate more negative sentiment could potentially be going nose to nose with China. And if we see that, if that escalates and that negative news drowns out any positive news, then we could see a further down market. But again, at the end of the day, when it's down and we have opportunities, that's an opportunity for us to, in my opinion, buy more good stuff and hold it for the long term and have a cheaper entry point. So we'll see how things, play out in this period. So thank you all for tuning in to TD Talks Market Commentary here on April 11th, 2025. Market closed and it roared back. We like to see it. We like the bulls. We like the bulls roaring back. If you've never seen the bull in Manhattan, you got to go see it. It's just a big bull statue, but it's kind of cool to see. So you got to go check that out. We are rooting on the bull here. So y'all have a great weekend, and I'll see you next week. The views and opinions voiced in this podcast are solely the views and opinions of Taylor Davis and do not reflect the views or opinions of any other entity or organization. The content provided is for informational purposes only and is not meant to be specific investment advice for any individual. Please consult with your financial advisor to address your unique circumstances. Taylor Davis does not provide legal or tax advice.